Welcome to the Explainer. So today we're going to dig into a single chart, one that seems to be sending two totally different signals about where Bitcoin is headed. One's right there on the surface, but the other one? It's hidden. Let's see if we can crack the code.
Okay, so you look at this and what do you see? At first glance, yeah, it probably just looks like any other financial chart, right? A bunch of lines and bars. But for someone who knows what to look for, this thing is telling a really fascinating story. A story that might just have a twist ending.
So, how do we figure this out? Well, the key is to see this chart not as one picture, but as two separate stories being told at the exact same time. First up, let's tackle the story that everyone can see.
All right, so story number one is all about the price. This is what you see right on the surface, you know? It's what most people focus on, those ups and downs that always grab the headlines.
So if you follow the price here, see that black line? It's pretty clear what's happening. The market is making a series of new lows between May and November of 2025. You see how each dip, each valley, is just a little bit deeper than the last one. That creates this really obvious downward slope.
So, on the surface, the story the price is telling us is, well, it's pretty pessimistic, right? It's a story of falling value, where every low point is worse than the one before.
But here's the thing, that's only the surface story. To get the full picture, we have to look deeper. We need to look at the hidden story being told by that indicator down at the bottom.
Now, see that wavy line down there? That's not the price. It's a special tool, an indicator that's designed to measure something much deeper, the real buying and selling pressure. And get this, while the price was heading down, look at what this line is doing. It's actually pointing up.
So, what is this thing? It's called the Accumulation/Distribution Indicator, or AD for short. Think of it like a tool for measuring unseen momentum. It digs into trading volume to see if the big players are quietly buying up an asset, even while the price is dropping. It's trying to figure out who's winning that secret tug of war happening behind the scenes between the buyers and the sellers.
And this indicator's story? It's the total opposite of the price story. This one is optimistic. It's suggesting that even as the price is falling, the buyers are secretly getting stronger, accumulating more and more over time.
Okay, so we've got these two stories, and they completely contradict each other. And it's right there, in that contradiction, that the real powerful signal starts to emerge. So let's break it down. On one side, you have the price story, which is making lower lows, making everything look weak. But on the other side, you have the momentum story, making higher lows, showing this growing hidden strength. They're telling two completely different tales about what's really going on.
You know, in the world of technical analysis, this exact contradiction actually has a name. It's called a bullish divergence. Bullish because it hints that the price might be about to move up, and divergence because, well, the price and the indicator are diverging. They're moving away from each other.
And if we go back to our original chart, you can now see both stories playing out at once, clear as day. The price trend pointing down, the momentum trend pointing up. This visual clash, this is the exact signal that analysts are hunting for.
So, we've found the signal. The big question is, what does it actually mean? How does an analyst take this piece of information and turn it into a potential strategy?
For an analyst, the logic kind of flows in 4 steps. First, you observe that the price is making new lows. Second, you confirm that a momentum indicator is doing the exact opposite, making higher lows. Third, you identify this pattern as a bullish divergence. And finally, based on all that, you start to anticipate that the downtrend might be running out of gas and a reversal, a move up, could be on the horizon.
But, and this is really important to remember, this is not a crystal ball. A divergence is a warning sign. It's like a little flag that pops up and says, hey, pay attention over here. It's all about probabilities, not guarantees of what's going to happen next.
And this all leads to a bigger question, doesn't it? Is technical analysis like this a science that can predict the future, or is it more like an art of weighing the probabilities? A signal like this isn't about knowing the future for sure. It's about realizing that the story you see on the surface, well, it isn't always the whole story. By looking for these hidden signals, analysts are trying to see if that unseen momentum is about to completely change the narrative